This episode is sponsored by Lens Protocol. Lens lets you own your own social media presence, easily monetize your content, and carry your social graph with you wherever you go. That means you, the creator, can focus on creating without ever having to worry about losing access to your account or having to build a new following again. Lens also lets you engage more closely with your fans, directly monetize your work, and if you're a dev, easily spin up a new app with Lens's full suite of developer tools. Go to lens.xyz today to claim the last social media handle you'll ever need. Hey everyone, welcome back to Rehash, a Web3 podcast. I'm your host, Diana Chen, and today we're speaking with Peter Pan, partner at 1KX, an early-stage investment firm that specializes in ecosystem growth. We cover a lot of ground in this episode, starting with how to identify successful early-stage Web3 projects, followed by a deep dive into NFT projects from the last bull run, and finally, Peter shares his thoughts on how we might simulate real-life physics in a digital environment. Peter first discovered crypto in 2017 and promptly quit his job as a UX designer to devote a full year into studying crypto, going all the way back through history and asking all of the questions from what is a computer to what do people really want in life. He believes the best way to learn about something new is to study its history, and he still applies this principle to his investment strategy at 1KX today. One of the hardest things to do in the space, I think, is to separate the hype from what's real. And Peter does a great job of explaining how he analyzes various Web3 projects to determine which ones will last the test of time. While most investors focus on the standard rhetoric of you want to look at who the founder is, you want to look at who the team is, Peter's thinking goes much deeper into what are the foundational layers of the project and what they're trying to accomplish, and what impact can this project have on the broader tech space in general. We talk a lot about the role of community in shaping the success of a Web3 project, and this led us down a rabbit hole of reminiscing and analyzing some of the NFT projects that rose to fame during the 2021 NFT craze. It's really interesting to look back on some of the NFT projects I hedged my bets on back in 2021 and see where they are today. I would say most projects I can think of ended up underperforming based on my initial expectations, but some, like Pudgy Penguins, have surprised me in a good way as well. Peter mentions a bunch of different NFT projects in our conversation, so if you're newer to the space and not familiar with some of these names, I've linked all of the projects he mentions in the show notes and would encourage you to check them out for reference or to learn more if they sound interesting to you. I could have talked about NFT projects forever, but I'm really glad I decided to move on and ask Peter about autonomous worlds at the end of our conversation because he got super meta with it and said some really thought-provoking things. Oftentimes with cutting-edge technology, I wonder where we draw the line between innovation and disillusionment, and I definitely felt this while hearing Peter talk about the potential for autonomous worlds to simulate core elements of reality, such as physics, in a digital environment. I also wonder sometimes whether the potential benefits that these cutting-edge technologies can bring might outweigh the potential costs of the damage that can be done by bad actors entering into the space. Similar to some of the scenarios that have played out in various Black Mirror episodes, and I raised that point with Peter as well. I would love to hear what you think about some of these questions after listening to our episode, so please don't be shy and don't be afraid to start a public dialogue with us on our socials at RehashWeb3 or jump into our Discord and chat with us more there. If you have friends who you think would enjoy hearing about these topics, please send this episode to them as well. And if you enjoyed this episode, please leave us a rating and a review on Apple Podcasts to help more people discover our podcast. And as always, thank you so much for listening, as I would not be able to keep producing these episodes week after week without your support. Peter was nominated by Louis and voted onto the podcast by Zaji Reyes, Caitlin, Nitch, Triumph, Louis, and myself. And so without further ado, here's my conversation with Peter. Hey, Peter, welcome to the podcast. How's it going?
It's amazing to be on Rehash. It's a pleasure.
It's amazing to have you back. The last time I interviewed you was years ago on the Unstoppable podcast. And I know we were just chatting before this that we've seen each other in the flesh at like every event, but haven't really had a chance to chat, which is kind of the opposite of everybody else in the space, right? They just chat online and never see each other in person. So I'm excited to talk to you and pick your brain about some of the things that you've been thinking about lately. Notice that you've kind of made a big resurgence on Twitter in recent months. You're kind of silent for a little bit, and then you just came back full force with all the threads and all the good content. So I'm excited to dive into some of that. I want to start off by just asking you broadly about some of the work that you've done at 1KX. Your job is to always stay on top of the newest trends and projects in the space. How do you go about doing that? What's your process or strategy for discovering these new Web3 trends or new Web3 projects?
Thanks, Sam. It's great to be on. And I guess it's a great question. I'm often asking myself the same questions many of the times. How do you find interesting ideas, interesting themes? But most often look for builders, typically. I look at what builders are thinking about, the design spaces builders are operating in. And for me, a big part of looking for the right teams investing in, or at least even just understanding the market, is to just mostly understand the history of that space. Let's say investing into NFT IP, we spent a lot of time just studying all forms of IP that started to proliferate on-chain since 17 and onwards with the start of NFTs. We spend a lot of time, not only just understanding the crypto native history of IP, but how IP is developed and through other forms and throughout history as well, right? From Disney to anime to games. And I think by forming these two perspectives, both, the current status quo with the crypto native, right? We're able to really spot and understand at the core of every market or every theme, what is actually really net new? What is actually really interesting? What is not interesting? What is just fluff? I think we really are able to try to dissect at the core of where there's potential. And I think once we have a good understanding of both sides, we often take our optimists point of view and say look, we know that perhaps this market, especially with NFT IP being the example, it's gone through the ringer. There's a lot of controversy. There's a lot of noise. It's really hard to understand. But when you take a step back, what is new about it? Where's the potential for this market? And one of the things we realized at 1KX, at least with NFT IP, was that it was the first time that creatives had a new medium in which they could bring IP to life at day zero without necessarily needing investment backing, without needing years and years to ship something. Creators could create IP, distribute it to a set of holders, build a community that resonates with it, and basically start to de-risk that IP from day one by building a community around it, by co-creating that IP with the community, right? And we saw this taking place across different projects and communities in different forms. It wasn't all perfect, it wasn't all sunshine, but at the core, it was a new way to build IP, and we believe that there are structural advantages to building IP in this fashion and structural possibilities and innovations that could emerge when you start to build on top of this emerging field of on-chain IP. And and I think you start to extrapolate what could happen, where the potential is, and I think you start to get excited. And I think you have to form a thesis around that excitement. But I think for us, it's really just understanding what is happening today. How does it contrast to how it's happened before, whether it's for world building, IP development, game, creator economy, and understanding where it's going to go next. There's no shortcut in really understanding this. I just think you have to study everything. For NFT IP, we looked at everything from start to end. We looked at every Bored Ape coin governance proposal. It's actually a bit of an inconsequential data point out of hundreds and thousands of other data points we look at, but it's really important for us to scour everything. Even if we think it's inconsequential, we want to look at everything. And then I think that we start to build up data points, and I think that's what allows us to be comfortable with our decisions, our perspectives, our opinions, is that we know we're getting closer to the point where we know what we don't know and we know what we do know. And I think we never have 100% information coverage, but I think what we're trying to do is build an information advantage against the rest of the market, and I think on top of that, be optimists. So that's a long-winded answer to your question.
No, that's great. I think one of the things I struggle with the most is being able to differentiate between something that just seems new and innovative and really cool versus something that will actually make it in the market, something that actually has an audience that already exists outside of this little crypto Twitter bubble that we live in. And I think that's the big challenge that a lot of people face. And so it sounds like from what you're saying that your strategy is really to collect data and then identify trends or patterns and then see if the new stuff fits into that sort of pattern. Would you say that's the strategy, or is there another thought process or other strategies you guys have in order to separate the shiny new object that's just really cool and innovative to us versus a project that is actually going to make it in this market?
Totally. I think beyond the work and the rigor that you just have to bring to anything, whether you're a founder, creator, investor. I believe we spend at 1KX a lot of time studying markets. And then we've also learned a lot by participating in these markets ourselves. But we've looked at markets, and at least on my personal level, I've been at the start of entire new markets, right? So I have reference points where it was just 20, 30 people in a Telegram group, curious and trying to build DAOs for the first time ever, to stumbling upon the idea of music NFTs with the catalog team before they were cataloged, right? And I think for us and for myself, a lot of what drives my intuition and my pattern recognition is just having had the privilege to watch a lot of consumer and application layer facing markets at the very start of the existence and having the longitudinal data points to build up the pattern recognition of when things are oversold, overhyped, when there's genuine substance. And I think it's really hard to tell. I mean, like, you can try to understand this relationally in the market at that instance in time, but I think it's really difficult to do that unless you have just longitudinal data over time as you watch a market go from peak of inflated expectations to trough of disillusionment to the steady path to alignment. And I think we internally think a lot about markets in this limelight as well. And we like to invest and get involved when people have begun to head down the trough of disillusionment. We love markets where people have given up or have a bad taste in the mouth. That is when we really get excited.
Looking back now on some of the investments that you made, whether you actually put real money into it or you just sort of had this thesis in your head that something was going to succeed or something was going to fail, can you think of any examples of projects that you felt very strongly convicted about that they would succeed and they ended up failing, or vice versa, that you thought there's no way this is going to make it and here we are today and they're still around?
Yeah, there's a couple fun examples. I'm not sure if I can share maybe direct learnings and things that have gone south, but I would say that, for me, I think one of the biggest learnings for me with investing was with having been so early to the idea of DAOs as just a concept, where it felt like a bit of a miracle when the world started to notice it. It was a bit of a crazy moment of hey, all these crazy ideas we had, other people having them too. And I think at a market when it's basically at 0 or 0.5, 0.25, and you see it go from that point to 1, and then 1 to 2 and 3, I think it's really easy to over extrapolate the growth of such a market or such an idea or concept. And you look far out into the future in 2, 3, 5 years and say, wow, yeah, basically take over the entire world. They're the most interesting thing. Centralized governance sucks. This is the hot new thing. And I think it's my style of investing is a lot more geared towards being interested in areas that are disillusioned or just far earlier than you should be investing into. So this is a big wake up call for me, where in hindsight of your ego is going to be incredibly gratified if you're very early and you find validation. And I think it's really easy to overinflate and over expect the trajectory of such a market idea or concept. And in reality, DAOs did go from 0 to 5 and maybe 6, and it's a bit more of a steady path to enlightenment after a bit of what I would call probably the recent trough of disillusionment, when everyone really started to understand what decentralized governance was good for, what DAOs were not great for, and so on. And I think we really had to almost relearn the affordances of just governance and humans in general from the ground up. It took us 2-3 years, but we're kind of there, where we're really a bit more realistic about what we're getting ourselves into with decentralized governance and DAOs. And I think we've started to now really experiment more meaningfully without the overpromised buzz of a utopian future. So this was a big learning for me. It's your ego can really get in the way of when you just find such gratification, especially if you sunk in years and years of your time into something. And it's it's actually, you're gonna find this sharp spike. It's going to be overinflated, going to go down a bit, and then you're going to probably just go on this slow, steady path of iteration towards something net new and valuable to the rest of the world. But it's going to take 2-3 market hype cycles to even really get there. And it's never this immediate step function into a new paradigm. It takes a while. So that was a really big learning for me coming from the early DAO space.
Yeah, I thought the DAO craze was pretty funny, especially now to look at in hindsight, because you just had all these young people who came in and were like, oh, new ways of organizing people, new ways of governance, as if none of this has ever been tested or explored before. And as if we didn't already have hundreds or thousands of years of young people coming in and being like, this is how we want to be governed, this is how we want to organize. And then that failed and nobody really took the time to study that. And it wasn't until people took the time to study that and to look into history and learn about all the different ways of governance and organization organization that have already been tested that we got over that trough of disillusionment and are in a bear market now. So hearing you say that, I was actually wondering, do you find that it's almost easier to invest in a bear market in some ways because you don't have all of this hype and things aren't being overinflated and moving so fast? You actually have a minute to sit down and think about things, to do your research, and to be more thoughtful in your decisions.
100%. It's like in the bull, you can effectively stop investing once expectations are overinflated beyond a point of reason. Ironically, like it's actually bear markets. I actually have a lot more urgency and I would say busier on a more meaningful level than bull markets because there's incredible teams building real meaningful products and launching real meaningful experiments that have a very real chance of creating impact with consumers, with teams, and companies and networks across the space. During a bull market, you have the sense of urgency out of the amount of noise and information your brain is being filled with and the amount of context shifts that you have to make. During a bull market, like everything is just accelerated timeline-wise, whether for the best or not. And in the bear market, I do think you get a real snapshot of reality, but I think it's also dangerous for investors to fall too much into the trap of thinking that like innovation slows down in bear markets. It actually really accelerates, but if you don't see it, it's most likely you're not deep enough to see it. It's a bit of a rule of thumb. If you just don't see any innovation and you don't understand any of it, you're just not deep enough and you're not close enough to the metal because it's always there. And whether you like it or not, it's waiting to be discovered by the right people.
Do you think the innovation that happens during a bear market is more back-end infrastructure things, whereas during a bull market, it's more like the front-end consumer facing?
It's a good question. You would think that's the case, but maybe yes for like, end contraction numbers in terms of like bottom line metrics. But I guess when it comes to investing privately in early stage rounds, what crypto investors do have comps and / comparisons for infrastructure investment opportunities. So you look at all these, the thing that's a bit weird about the space is that you can invest into total vaporware, it can launch a token and you can still make money as an investor. It's just like such a perverse set of incentives for investors to just almost defect from playing the public-sum game of funding innovation and like advancing the plot, which is like it's really not great. But, it's reality, it's true. And in a similar lens, investors know that most infrastructure projects can just promise a new utility, a new form factor, something new as a platform, launch a token, and there's comparisons with companies and token networks around the space that basically show like the potential of good returns. It shows return promise and potential even in this market. Whereas for the application lane, for consumer facing products, you don't actually have that many investors investing today in the bear. And I think I guess what you said was in a way true, but especially for the consumer application layer where everyone is still trying to figure out how to build around the new Web3 affordances for consumer experiences, right? But I guess in today's state, infrastructure, it's still actually pretty competitive amongst investors due to the reasons I mentioned before. For consumer, definitely underinvested in. And that's really why we've actually started to shift a lot of our focus for 1KX towards just pure consumer and application layer founders and teams.
One specific consumer behavior that I've thought about a lot lately, and I know you guys have as well, is this consumer behavior of collecting NFTs. And for me, I've thought about it specifically from the perspective of collecting media NFTs, whether that's music NFTs or video NFTs or podcast NFTs. And I know that's something that you guys have thought about a lot too at 1KX. So I wanted to ask you for your thoughts on that. But maybe we'll start this conversation around collecting NFT from the beginning, because you've already emphasized the importance of going back into history and understanding the big picture of what we're dealing with. So can you take us back to when NFTs were kind of in its prime back in late 2020 or early 2021? So when it really started hitting the mainstream. Take us back to those days and then walk us through how you've seen consumer behavior with regards to collecting NFTs evolve from then until today.
Yeah, it was specifically March 2021 when you had Dylan Field and his repertoire and dialogue in the Clubhouse about the alien punk. That was when the world discovered NFTs. From my perspective, the whole thing is just like a bit of bull market. I don't think we've actually really started to explore meaningfully why people are collecting NFTs. I think most people were collecting NFTs until more recently because they thought they could make more money off collecting it than not, right? And I think, yes, you had some stories and some case studies around like Providence Valley Crawl where individuals were collecting assets due to the story and due to the intrinsic value of what it meant to one another. I think for me, the reason I collect most of my NFTs has mostly just been an act of like self-expression. And I had a very specific story. More recently, I had to move ETH addresses from one address to another. The prior address I generated like 6 years ago, imported and exported like ridiculous. It's probably in like a dozen emails or some, hacker's database by this time. But the problem is like I had hundreds and hundreds of NFTs in my old address. And I moved my ENS to the new address, and I didn't want people to look me up via my ENS and like see nothing. It's like a bit of an empty house. So what I started doing on a Sunday is just like started transferring every NFT one by one. So like the OpenSea batch like transfer function wasn't very good. It broke all the time. So I had to basically move every NFT one by one, decide which NFT I wanted, move it. It cost me about $5 each transfer. And I had to like play this game of like which NFT actually really mattered to me. And it almost was like I was reminting them all over again due to the gas cost. And I realized if I did move everything, it would be like 800 times $5 each. It would be like just a ridiculous amount of money just burn and transferring stuff. So I spent a lot of time doing that on the Sunday, and I think I quickly realized that I had left all the high value NFTs behind, except for my punk, of course. And I moved and kept all the stuff that really meant a lot to me, that would, I feel like, if someone saw, would represent who I was. And I really cared about the artifacts that really sort of represented who I was at the core of like throughout my experience of being in crypto and who I am and what I liked, what I resonate with. And I think that while speculation is probably still going to drive the majority of people's motivations to collect, mint, and engage with NFTs, I do think in the end of the day, it's going to come down to identity formation and the fact that I know there are several others out there on the internet that will care about what I own. And as a result, I'm going to care about what they own. And as long as this initial interactive network exists, there's going to be others that look at the people who are engaging in this sort of behavior, and they're going to ask themselves, what NFTs represent me? And then I think like it's been a thesis of mine that, it's not even a thesis, it's really like why people use technologies. Most people use technologies to either connect with others, to self-express, or to mostly flex on their neighbors. But I mean, connecting with others and flexing neighbors, it's a bit of a subcategory in a way, but people are going to adopt Web3 for the very same reasons. And do you think that the majority of people's first-time crypto consumer experiences in the future are probably going to all relate to claiming and owning or collecting NFT, but that representing an act of either self-expression? And what an act of self-expression could be, what it looks like in the current world, let's say for music, is like to collect a record, to collect vinyl, to go to a concert, to see an artist, to buy merch. That's what they look like right now, but it all involves the transaction, a spending of money, but ultimately the end consumer gets an artifact that represents what they really connect with and what they really love. And I think that this is probably how most people end up interacting with Web3. It's going to be an act of love, passion, expression, and it's going to be represented via an on-chain asset or on-chain experience, right? People desire the same things, and there's just newer and newer technology that allows us to express ourselves through it in ever more granular fashion.
Do you think the total consumer base for people that collect these media NFTs will ever reach what we saw with people collecting these 10K PFP projects back in 2021? Because what I've noticed is there's a big distribution problem with media NFTs today. Unless you're on Catalog or Sound, or you're already aware of an artist who is releasing their music as NFTs, it's pretty hard to find music NFTs to get behind and to collect for the average mainstream music listener. So yeah, I'm curious to hear your thoughts on what you think is the potential of media NFTs in the long run.
It's a good question. I guess the first question is, will they be collected and maybe traded on the scale of what we've seen with 10K PFPs? At least, I think in general, it's a new form factor. I don't see why they would ever stay niche and small if we make the assumption that there's all this potential value that can be realized. I think like when it comes to like trading and collecting this and having a marketplace volume for assets, I don't think every asset needs to be financialized or ever end up being financialized. For an asset to be financialized, you have to actually have enough supply and enough people that are willing to give up the ownership of that. And in a way, if you're really generating media-based NFT drops that are really hyper-targeted to people who engage and resonate with the content, you can actually see a situation where like no one's actually willing to give it up and willing to like sell it. And I think that's fairly representative of a lot of the collector activity I see today, at least for myself and others I know. We're often collecting not to ever sell it. It's just purely to represent I'll tie in relationship with a creator or an artist. I don't collect a writing NFT to flip it. I collect it because I want to show the person who created the content. Let's say Cooper, right? He creates great pieces of writing. I collect basically to say GM to him in a crypto native fashion, so that when he looks at who collected it, I'm kind of them and being like, hey, what's up? I see you. I like the content. And I think of that as a new way of expressing gratitude and a new way to express our relationships with one another. And if done well, it's unlikely it finds financialization at the start. And I do think that you do have to engineer some assets to be for financial speculation at an eventual point in time. Will these assets that are mostly minted for like identity formation accrue value? I think it depends on the mint structure as well and whether you want to be intentional about that. So let's say if you mint a meta label record and you distribute it to 30 of your closest internet friends and supporters, even if someone offers them, a fairly high bid, it's unlikely to see many of them sell because they care about it. And you do need a bit of speculation for price discovery to emerge. And for assets to become stores of value, you do need the ability for others to increasingly collect it more and more. In a way, like the desire to collect and the buildup of the desire to collect over a price range is what it means to be a store of value. Like people believe that squiggles have value, right? And squiggles is an amazing example where like it was actually well set up to become a store of value that gains that status through price appreciation. But what people forget is that Squiggle was minted for like $80 or $50, something small. And most people collected it because they loved it. They loved what it stood for. And it's the first time people created on-chain generative art. And the value of the NFT is not through the initial mint price, but by the stories the community members and the holders tell about it afterwards. That's where most of the value comes from. And if you really want to actually engineer an asset to become incredibly valuable, you actually need to figure out a way to get it in the hands of people who will love it the most and take care of the asset the most. And oftentimes those people aren't whales. They're not crypto native collectors even. The people who are passionate about something and see ownership as an incredible privilege. And for the same reason, I believe that's why Squiggles had such amazing initial holder distribution and why the holder base really brought so much value to it. And the same reason I believe that most highly valuable sorts of value assets will always start at probably increasingly cheaper and cheaper levels, just due to the pure amount of supply we're going to see enter the space over the next couple of years. But I believe they're always going to look like everyday mints that people express themselves through, and they'll always start lowly priced, not for the sake of it, but they're going to be priced to be accessible to people who really love it, as opposed to whales and speculators and professional collectors. Do you think the story will be the same? It's that people who really love it get their hands onto it, they tell the story, they really push it, they bring life to it, they bring others in. Others go from being an outsider to being a core community member, and others go through that journey over and over again. I think like that's probably what really matters for an asset to become a store of value. The ability to convert passive outsiders to passionate holders and to bring people over and over again through that full cycle is really the key there. And then once it happens, you're going to see speculators look at that cycle and activity and say, like, I believe this is going to continue, and I'm going to buy some, and I'm going to hold some, I'm going to sell it, I'm going to flip it, I'm going to sell it over a period of time. And then you're going to get existing holders who really believe in it, say, like, I believe there's incredible value here, I'm going to keep buying it even though it goes down. And these are my price ranges for my bids. And that's been one of my criticisms to a lot of creative platforms, that their mints have been overly engineered to just maximize for short-term revenue, short-term mint, and collects from existing collectors, existing whales, existing flippers. And yes, it maximizes creator and artist revenue, but it does not bring others in. It does not tell better stories. It is not an accessible activity. And I do believe the next most interesting set of on-chain assets will be brought to the masses by a platform or by a creator that optimizes for accessibility and reach, as opposed to just purely immediate give me the highest amount of money. I think they're going to probably look a bit more like open-ended, fatly priced mints that probably don't get minted out. But that's precisely, I think, the point of open editions and flatly mints. They're not all of them meant to mint out.
Do you think that storytelling component is the most important factor that determines whether an NFT project will end up succeeding or not? So like, for example, taking two projects and comparing them side by side, two projects that I got really excited about back in 2021 were Pudgy Penguins and Cool Cats. And back when I purchased each of those, Cool Cats was looking way more promising than Pudgy penguins. Like Pudgy penguins, I truly just thought they were so cute. And that ended up being my first PFP on Twitter that I proudly had for quite a while. I still have a sticker of it on my water bottle too. I just thought they were so darn cute, and that's why I bought one. I didn't think they were going to have a lot of value or anything like that. Whereas at the time, I was a little bit late to the Cool Cats game, but I was like, I'm going to dish out a ton of money. You know, at that time, it seemed like a ton of money to buy a Cool Cat because I think this is really going to explode. And what we've seen play out is that it's kind of been the opposite of how I viewed it. And so when you look at these two projects, for example, what do you think Pudgy Penguins has done differently and maybe better that has helped them to see more success over time than Cool Cats? And not to call out either of these projects. Like, I still love both projects, but I just think this is a fair comparison because they're both 10K PFP projects, similar audience groups. And it's just surprising to me how they've played out over time.
Totally. So I think like Cool Cats did an incredible job expanding mindshare amongst crypto natives. I think that was really the superpower, but I think where they really stumbled is that they never really like leaned in to understand what the community wanted. And after successive launches of the milk token with the comic launches, I think they were really trying to be something totally else. They weren't trying to be a buttoned up traditional IP brand, and they're like, hey, look, we're IP company, let's release comics, let's release merch just for the sake of it, right? Bored Apes did a token, we'll do a token ourselves, and we'll add utility because utility is cool, right? I think that was where they stumbled, is that they made several big assumptions to what they should become and what they should ship, as opposed to more listening in to the holder base. I think DeGods is probably a really good mirror of what really leaning into what you are looks like. They're not pretending to be anything else than a crypto native brand as of right now, held and owned by crypto native degens. It's honest, and everything's geared around that. I think that's where they do really well. For Pudgy, once Luca took it over, I think there was just like a clear vision of what it wanted to become, and there was this sense of integrity for it. And in a way, that's why you do see Pudgy dumping really the least out of the entire market right now as we speak. My thesis is that as Azuki dumped, they effectively were the market leader of their own playbook, in the sense of, we're going to tell a crypto native story, we're going to hype it up, we're going to do a mint, and then we're going to reinvest that money into building more and more content, and it's just going to go on. But mostly spending a lot of money on marketing narrative as opposed to maybe shipping products or maybe expanding the mindshare of Azuki beyond crypto natives, right? And as Azuki's narrative tanked, it has done the same for many other projects who have been following effectively the same playbook. You look at Memeland, along with Azuki, really tried to pioneer this playbook after Yuga, right? But they've since stumbled, and every other project that's been modeling themselves out as a Yuga, as a Azuki, as a Memeland have since then really found repricing back down to reality, or at least the market is attempting to do so. Whereas for Pudgy, this game is a vision-based one. It's still a vision to bring cute IP to the rest of the world, but its execution is independent of market prices. And it's showed successful traction and engagement from not just crypto natives, but the broader consumer audience across Instagram, across other forms of media, across toys through Amazon. And yes, it's probably a lot of crypto natives buying the hell out of the toys on Amazon, like, let's be real. But even then, they have 20, 30, 40 million views on the Instagram content that doesn't mention crypto and Web3 at all. And I think that's the key difference, is that Pudgy is pioneering a different playbook. They haven't figured everything out, but it's a radically different game than what every other collection is playing today. Cool Cats and Pudgy's paths look very different, but I would rather even compare Cool Cats and DeGod's paths and origins look more similar to each other than how Pudgy's would look like, based on what the holders look like, why they accrued value. And I think it's just like really important to be real about it, because I think you find collections, let's say doodles, that try to grow up a little bit too fast and forget why they had any value there in the first place. You raise $50 million and then suddenly you take yourself a bit too seriously and you place a bit too high of an expectation. And I think you kind of forget why the community was there in the first place. And I think that's probably the key here. The moment you forget why you were here, why you were loved, you're going to be left behind. You need to be grounded in that reality, I think.
You can work for yourself without doing it by yourself. As a freelancer or independent worker, you're constantly engaging your network, and updating your professional profile, but the tools we use to do this haven't evolved in the last 20 years. Quest makes it easier than ever to gather support for a new idea, broadcast updates to your network, and showcase your best work on your profile. It's one link for who you are and what you do. Sign up at rehash.quest.com to follow along with our quest so you never miss an episode or create your own quest today. Have you ever wanted to buy an NFT with a group of friends, crowdfund a project, or start a collective, and found yourself stitching together tools manually to help you make your dreams a reality? I certainly have, and that's why I'm excited to tell you about Lore, the Web3 co-ownership platform. Lore lets you seamlessly spin up a shared wallet, pool resources, and coordinate group activity, all in one unified experience. Connect to dApps and make any transaction multiplayer. What you can do together is endless. Go to lore.xyz/rehash and start a collective today. I thoroughly enjoyed talking about pudgy penguins and cool cats and going back to like peak bull market NFT days because I haven't been able to talk to people about this for a couple of years. One more thing I wanted to ask you about before we wrap up is about another consumer segment that I know you've really got your head in pretty deep, and that's autonomous worlds and on-chain gaming. I have to admit, this is an area I'm not personally as familiar with, but I have had quite a few gamers on the podcast recently that have gotten me very interested in on-chain gaming to whatever extent a non-gamer can be interested in that. But for listeners who also maybe didn't grow up gaming or aren't familiar with this idea of autonomous worlds, can you start by just talking about how you define autonomous worlds and then how you see that sort of fitting into this larger idea of on-chain gaming?
It's a good question. I think about this a lot because I'm still trying to figure this out, to be honest. It's a deep, deep rabbit hole. The best way I could describe it is that whether games or system or set of rules, from a religion to a government to a video game, has been mostly controlled by a very central key group of people, like a central publisher, perhaps, or central government. It's always controlled from a pure top-down perspective, where they control authority around the read-write access, and the ability to extend that system or logic is permission. To push legislation, you have to go through Parliament and Congress. For the first time, we have this new medium called the blockchain, where you can effectively codify those rules and let anyone extend upon them in any direction they wish to do so, as long as they abide by the core set of logic or the initial founding rules of that world, if you will. On the surface, it looks like a bunch of games that just want developers to come and build on top of them. But I think there's something really interesting about creating digital worlds with digital rules that outlive its creators, and that can be propagated by a community of builders. In a way, there's mirrors and analogies to the idea of a DAO. And I do wonder, like, if autonomous worlds were actually really like the real idea of a DAO that we've been kind of searching for. And in a way, blockchains enable permissionless, extendable worlds to exist in a fairly pragmatic form. Ethereum itself, in a way, is an example of a world that's fully autonomous, where a core set of rules and logic were defined by the consensus algorithm, everything from the networking layer to the EVM itself. And maybe if the core devs all took a vacation for 5-6 years, maybe the core protocol would not make any meaningful progress forward, but you would still find a global community of builders pushing it forward. And I think that at its core is what an autonomous world is. I think there's this interesting, thesis around taking elements of reality and instantiating them as code on chain to effectively simulate reality itself in a sandbox fashion, but with live economies, not just simulated economies, and live human participation, not just simulated human participation. An example could be if you could take a subset of real world physics, such as biology or chemistry, put it on chain and let people discover and create new molecules, new drugs, new ideas based off of the codified primitives. I think we'll eventually get to a point where perhaps we're able to create not maybe pure simulations of reality, but simulated subsets of physics and reality itself, where people could play and effectively build and do whatever they wished in that sandbox, and perhaps even drive our understanding of the real world beyond and have this feedback cycle. And then another example of this happening today is with governance and DAOs. And we talked about all of that, being a bit of a overhyped period of time for DAOs and governance structures. But even then, as much as we've struggled to really build the DAO in the purest form, you could have thought of Ethereum over the last 2 or 3 years as been like a sandbox for trying to figure out how to find better or new governance structures and coordination structures. And at least we've come across Moloch DAO, we've come across the Nouns DAO. I wonder what else we'll come across that will have been invented in the sandbox that is ultimately far easier to experiment in, far easier to build in, far easier to iterate with it than if you would try to iterate with the traditional corporate structures and legal system. So in a way, Ethereum is a real live economic simulation of economic structures and economies itself. You could rebrand Ethereum as a game where we spin up this live economy that's transacting, where you have thousands and perhaps millions of individuals engaged across the world on it, all acting selfishly, playing the role out, and then just, a bunch of nerds on top trying to figure out how to coordinate everyone through different structures. It's like DAO the Gathering the game, but I think what other type of simulations and games can we build? Going beyond the example of Ethereum as the first example, right?
It sounds like your definition of autonomous worlds is you're thinking more about the back end, like the infrastructure, the core concepts of we want to have a decentralized community where everybody has an ownership in some part of this world through some virtual economy and everybody has some sort of governance.
Not even. The idea about autonomous worlds is that ultimately it's these worlds aren't owned by anyone. Just like how physics and our reality as itself is not owned by anyone. You can't own and control physics, right? Unless maybe you believe in the conspiracy theories of people trying to control the weather. But you can not believe in physics, but it will always operate. And others will interact. The rest of the world runs on physics itself, whether you decide to believe in it or choose to ignore it. And in a similar way, the idea of creating autonomous worlds is you're creating worlds that no one can control, own, or take away that world from anyone else. And once you're able to do that, you'll find people naturally building on top of them, extending on top of them. And then a set of physics that you instantiate worlds with are effectively open source public goods that are just meant to be free. If you want adoption and you want value to accrue, you want to actually engineer the thing that accrues the least value to itself and to its creators, rather than the inverse. And then yes, some teams try to balance the in-between, and we've seen that happen. We've seen other successful networks take invested capital. But in the end of the day, I think it's really about building open source, decentralized public goods that hopefully form the petri dish for new interesting experiments and cultures and experiences.
How do you see this beautiful free market, open source, fully decentralized thing not turn into a Black Mirror episode of total anarchy, being taken over by bad actors? The system is getting hacked. Everybody is getting taken advantage of. I think as beautiful as full decentralization and fully open source sounds, there are still a lot of dangers to it, and we need to put in lines of defense to make sure that it doesn't all just explode.
It's a good question. I don't know, to be frank. I think we're still trying to figure out what it looks like. What does a working functional version of digital physics look like? It's really hard to design around it. We're still at the stage where we're trying to build deeper and lower level set of digital physics that can instantiate new worlds. And I think most teams right now are still trying to execute very high level executions of this vision and idea as games. But I think the lower level you get, the less it looks like games, and less it looks like Minecraft, and the more it looks like on-chain simulation of how molecules work, and how atoms work, and how physics work, and how photons work, how just reality works itself at the core level of what physics is, right? It's just a set of rules and functions that define how really everything works from light to matter, right? But yeah, it's I'm not sure.
It's all kind of abstract right now, but it's exciting to think about. And I'm excited personally to see how it plays out. Peter, any final thoughts you have on autonomous worlds or on collecting NFTs or anything that we've talked about before we wrap up?
No, not really. I think it's bear market stuff. It's have fun. It's not going to last. Crypto is definitely anti-consensus now, right? In the lens of technology or in the lens of everyone else on the planet. And I think that's the most exciting time to be building and working on something. The moment this becomes obvious, it's going to be boring. it's going to be known. The worlds are going to be explored. Things are going to already be built. It's going to be a lot more incremental then. I think we're still at the stage where so much of this is yet to be figured out. So it's a privilege to even be at these inflection points.
It really is. And I feel like a bear market is so much less pressure for experimenting because there's no money floating around. There's no expectations, no pressure. You can kind of just experiment with whatever you actually care to experiment with and see what works and what doesn't. And then by the time the bull market comes around, you'll have a much more defined playbook for how to make things succeed. Last thing, Peter, I'm going to ask you to explain a tweet real quick. So I've actually gone through the archives and dug up two tweets that I think on the surface might seem a little contradictory, but maybe they're not. That's why I'm asking you to explain it. The first one is from December 22nd, 2021. You said, "We believe that the most successful and vibrant P2E, play to earn ecosystems will prioritize community and culture first rather than gameplay. It is about people." Okay, so that's the first tweet. Second tweet is from March 24th, 2022. So approximately 3 months later. You said, "Kumbaya DAOs equal DAOs that love to hold hands, make short-term feel-good, comfort-based decisions, running pointless community building efforts without actually building core product and service efforts." So I'll just tell you how I'm interpreting this and you tell me if I'm wrong. On the surface, it sounds like the first tweet you said in December 2021 is like, we need to focus less on the actual product or service offering and focus more on community because it's all about people. And then in the second tweet, 3 months later, it sounds like you're saying we've gone too far in that direction and we've gotten a little too like touchy-feely with this community thing and we need to refocus back on building product. I'll let you explain.
Yeah, I think my mental model of what it takes to make a game economy successful is like evolved since then. I guess like to explain the two tweets, it's like I think the first one, right, where I talk about community being a necessary thing, is that was like during the peak of like the gaming bull market where so many teams were trying to take the same broken tokenomics from Axie Infinity and raise money and launch with them, expecting the same outcome. And from my point of view, like a big reason to why, not even why Axie succeeded, but it's like Axie has survived in spite of poor tokenomics because of the community. I would say like guilds are more parasites than value-added members in general, you know, in hindsight, for these economies, as they're just taking money out of the economy rather than creating more and putting back in. But you're never typically going to get the economic design of these token economies right on day one or even in the first version. And when that fails, you do need to have a backbone of a community that's willing to eat some pain. And I think that was really what I was alluding to. So the second tweet, you know, I was really talking to a lot of the DAO space that were just like creating these DAOs that were just like permutations of the same people, all of them, right? And it was just a lot of pointless like pony showing. I don't know if that's the right term, but the context was different, right? So like in the gaming side of things, over financialization, too much. And then, you know, none of that worked anyways. In the DAO space, I wouldn't even say it's like meaningful community building then. It was just like grifter on grifter, like groupie grifter 2000, the game, you know, it was just like really, really frothy stuff. And I'm like, guys, go back to work. Like, I think that's what I meant to say.
Yeah, no, that makes sense. It's all about a balance, right? We need to focus on the product and building something meaningful while also not neglecting the community side of things as well. Both are important and we can't go too far on either end of the spectrum.
Yeah, like both stress me out. It's like...
Well, thanks for explaining that, Peter. Before you go, tell people where they can find you if they like to follow you personally, and then anything you'd like to plug with 1KX as well. Feel free.
Yeah, hit me up on Twitter. I'm very active there.
At Peter Pan, we'll link it in the bio. Thanks so much, Peter. Thank you, listeners, for tuning in, and we'll be back again next week with a new episode of Rehash. Thank you for tuning in to this episode of Rehash. Rehash is hosted, produced, and edited by me, Diana Chen, and sponsored by Lens, LivePeer, Quest, and Lore. Rehash is also supported by our community of NFT holders who curate our guest lineup each season. To get involved, head over to our website at rehashweb3.xyz and collect this episode as an NFT. Anyone who collects an episode becomes part of the Rehash community and will be able to nominate guests for future seasons. To learn more about how to become a guest on the podcast, go to rehashweb3.xyz/podcast. And to learn more about sponsoring the podcast, go to rehashweb3.xyz/sponsor. Finally, be sure to follow us on Twitter, Instagram, and TikTok at rehashweb3 or on Lens at rehash.lens. And don't forget to rate, review, and subscribe on Apple Podcasts, Spotify, or wherever you get your podcasts.